Sean is Chief Asia Strategist at Nomura International. Nomura ranked first in China, research by Institutional Investor Magazine's inaugural all-China research team ranking last month. Quite something. Got to live up to that now, Sean. All right, now, where are we with this whole story? PMI, some would say better than actually was expected. Some are looking at a contraction, a level below 50 here, but we did see expansion still.
I think the most important aspect of it was the fact that inventory levels were not aggressively built, and all that detracts from GDP growth coming into the quarter. What it does mean is that there isn't likely to be any overshoot if there is a sudden slowdown in global growth. So the corporate sector seems to be judging the pace of the recovery reasonably well.
Q3, did we see the bottom of that point?
I suspect so. I think we'll probably get a continuing soft patch for another month or so. But actually, Eurozone data is firming up. So actually, the surprise maybe going into the end of Q3, early Q4 is that export data might actually pick up again. And we've seen that through air cargo and business traffic.
But we also see, look at the corona here, the Baltic Dry Index, that's seeing a drop-off here. Some are saying this is the sort of calm before the storm for Europe. Austerity measures will kick in at some point or the other, and that's going to hurt.
Well, I think on the Baltic freight, you have to judge it in relation to the fact that pricing of iron ore has changed to a quarterly basis. So there's much more volatility going into that particular sector. And secondly, actually, in terms of iron ore movements, there's quite a large amount of inventory already being built up in the China port. So maybe not as much of a leading indicator as people are putting to.
OK, talk to us about the new bull market then for China. Torrid year so far for the Shanghai Composite.
Well, it's been a dreadful last 6 months for equity investors, and the disparate performance between the equity market and the economy is perhaps testing people's nerves. I think two things to bear in mind. One is that on a relative basis versus local asset markets like interest rates, the A-share market comes out very, very cheap. Secondly, liquidity conditions we think will start to improve during Q3. Normally, the A-share market does well when the balance of payments turns positive. And lastly, sentiment has been dreadful. So generally, small changes in sentiment, and the A-share market does well.
You know, when we had that bull market in 2009, it was China which started it off. Can China start this one off too?
Well, I think the key here is that we haven't really seen any aggressive policy tightening. And I think the key point has been, as the economy's been rebalancing, I think the urgency for more threatening measures to cool parts of the economy down will recede. So for asset markets, just generally a good period for them to perform in. So I think for the A-shares for the next quarter or so, they may turn out to be one of the better performers globally.
What about the currency itself? Is the heat still on the Chinese authorities right now, still?
Not really. I think actually by still shadowing the dollar, China will get the benefit of the recent weakness in the dollar, which has been quite good for the China exporters. And secondly, the freeing up of the actual trading band, that probably gives China another hand in terms of negotiations.
Quickly, with the other aspect, we had this IMF report come out, which was, of course, the first time that they've allowed it to be published. Does that suggest that they've got the upper hand to some extent now, Chinese authorities, in the yuan debate?
I suspect so. I think the key point here is that over time you probably will see the yuan move to some form of a trade-weighted basket, but also in the background they're liberalising a lot of the capital convertibility, and I think that's the thing that's been missed by the equity markets, particularly in Hong Kong, because it really does benefit from the offshore trading of renminbi going forward.
Sean, thank you so much for joining us. Sean Darby, Chief Asia Strategist at Nomura International.